What does it take to build an ADU? Determination, a residentially zoned property, the right team, and, well, money. For most people, that means a loan. And I've learned a lot about funding ADUs over the past few years. And there are a ton of financial products out there for homeowners, some a little more scammy than others. And it can be kind of overwhelming to sift through all of that. But there are 4 basic loan types that really matter to people who want to build an ADU. Now, keep in mind, I'm not a loan officer or a financial planner. I'm the CEO at Maxable, the nation's leading ADU educator. We've guided over 700 homeowners through ADU projects. And if you want our list of preferred ADU lenders, check out the downloadable PDF I put in the description below. Since California passed sweeping ADU legislation, more than 50 other cities have rushed to pass their own ADU ordinances. And we've helped thousands of homeowners navigate their initial research with our seminars, e-courses, and on-site home evaluations. And we connect them to vetted ADU professionals. So there's one thing that every project has to start with: a realistic budget. To pay for their ADUs, most of our homeowners use one of these 4 loan types: cash out refinance, a HELOC, which stands for home equity line of credit, a renovation loan, which is sometimes also called a construction loan, or they pool their resources with their family. Let's take a look at each of these methods. Some of our clients use equity in their home to finance their ADU. Equity is the difference between the current value of your home and the amount that you still owe on your mortgage or any other loan attached to the property. A cash out refinance is when you take cash out of your home's equity and then refinance it with a new mortgage. The interest rate is usually fixed, so your monthly payments will always be the same. Interest rates, as you probably know, have been extremely low in recent years, which means that your monthly payment may only be a few $100s more than it was before the refinance. A cash out refinance is an excellent choice for funding your ADU because there are no strings attached to the lender. You can do anything you want with the money, making the design and construction process simple. HELOC, a home equity line of credit, also gets you money with no strings attached. It's a line of credit similar to a credit card. You access the money as you need it rather than getting it in a lump sum. The amount that you can access is based on your home's equity, just like a cash out refinance. But while a cash out refi typically has a fixed interest rate, HELOC's interest rates can be variable. So it can go higher or lower. And you have a certain amount of time, often 10 years, to withdraw the money. During this draw period, you'll only pay interest on the HELOC. It'll be based on the money you've actually withdrawn, not the amount you can draw. Over the draw period, you can take out more money. You'll need to make monthly payments on both the interest and the principal. The repayment period is usually 20 to 25 years. Because HELOC interest rates are unpredictable, some people don't like them, but for others, a HELOC really works. Some of our clients who have chosen HELOCs rent out their ADUs, so they're generating income right from the beginning, which makes the variable interest rate a little less of a big issue. We actually used a HELOC to put solar panels on our home, but make sure you read the fine print. We were charged an early termination fee when we paid off the loan well before the due date. Next type is renovation loans. Renovation loans are popular with clients, especially if you don't have equity to pull from. These loans are not dependent on your home's equity, but on other factors such as your income and your credit score. With a renovation loan, the lender refinances your mortgage to include an amount that will cover the cost of your ADU construction based on the future projected value. These are short-term loans designed to bridge the gap to get you to the end of construction. As such, the rates will be higher and they'll tend to be higher loan origination fees. Renovation loans are held in escrow account and released as the contractor hits milestones in the construction process. Here's how you get the loan. The lender will have you fill out a loan application, and based on the application, they'll tell you how large of a loan you'll qualify for. But they won't give you the money until a contractor has provided them with a detailed estimate of how much it's going to cost to build the ADU. The most important thing for you to know is this: your ADU design must align with the construction cost. If you design a really fancy over-the-top ADU that's going to cost more to build than the amount the renovation loan you'd qualify for, then you're not going to get the loan. So here are the steps. Number 1 is find out how much of a loan you'll qualify for. Number 2, hire a designer to design an ADU that can be built for that budget range. Number 3, get a contractor to bid on the design. If the contractor's bid is too high, tell the designer to adjust the design accordingly. And number 4, after the project is complete, the home will be reappraised and the loan will be refinanced as part of your regular mortgage. Okay, this is getting a little confusing. How do you hire a designer if you don't have the loan yet? It can be a little bit complicated. Renovation loans are complex, but it can be a great option for building an ADU if you don't have a lot of equity in your house to draw from. And Maxable, part of our job is to just help you figure all of this out. The more you know about financing, the closer you are to being able to build your ADU. The PDF with recommendations in the description is a great place to start, and your local credit union or bank may have options for you as well. If you have questions about financing or ADUs in general, ask them below and give this video a thumbs up.